On August 21, 2026, global exchanges processed millions of individual decisions, generating a torrential flood of pricing data, volume metrics, and percentage shifts. From the outside, the market appears to be a precise, rational machine, perfectly calculating the present-day value of every asset it tracks. This chart contrasts average daily volumes against today's anomalies. The perfect calculator breaks down with Moderna, surging 9% as 87 million shares changed hands. Beside it, Tesla climbed 5% on 59 million shares. Robinhood skyrocketed 14% on 50 million shares. Traditional models and spreadsheet fundamentals struggle to justify these simultaneous, violent volume spikes occurring across completely unrelated sectors. A gap exists between the highly regulated predictions built by trading algorithms and the volatile reality executing on the floor. To understand why 50 million shares of Robinhood trade in a single afternoon, we have to look past the math and observe collective human psychology. These simultaneous, extreme volume spikes suggest the market is behaving less like a calculator and more like a reflection of collective human impulse. Greed is often dismissed as a moral failing, but in financial markets, it operates as a predictable, mechanical force. This style tracks the emotional temperature of the market. Retail-heavy favorites like Tesla and Robinhood serve as real-time barometers, sitting at the absolute edge of the euphoria zone. The fear of missing out acts as a compounding engine. As retail investors watch a stock climb, they rush in to avoid being left behind, forcing volume up exponentially. This chart shows the price line violently detaching from the stable baseline of a company's actual business fundamentals. This creates a momentum trade, where the primary justification for purchasing an asset is the observation that others are already buying it. The tens of millions of shares traded in Robinhood and Tesla provide the empirical footprint for this collective movement. At peak momentum, the underlying company becomes secondary to the pursuit of the crowd's rising energy. Far away from established consumer brands lies the frontier, the highly speculative edges of the market where narratives dictate value. Here, narrative speculators deploy capital based on visions of the future, often ignoring present-day viability. This explains the explosive August 21 rise of quantum computing stocks, with both IQM Quantum Computers and Horizon Quantum Holdings surging nearly 15%. This timeline plots the current zero-profit reality against the speculative promise of what quantum technology might achieve decades from now. When a futuristic narrative falters, the price often collapses instantly under the weight of market reality. This introduces the opposing psychological force on the battlefield: sudden, violent panic. While quantum stocks soared, the artificial intelligence firm Cerebras Systems slid over 6% as sentiment shifted. This fear reached established giants as well, with Alibaba losing nearly 9% of its value on the same day. Market reality asserts itself through the instantaneous, violent repricing that occurs when a collective story begins to fracture. Wall Street often treats the gritty reality of the present day as secondary to the expectations of the distant future. This creates the expectations paradox, where hard present-day facts are subordinate to shifting future-day beliefs. This scale models the paradox. Bleeding-edge companies with zero profits see their valuations soar because the market applies massive weight to their glowing future promises. Simultaneously, profitable giants can see their valuations crash over minor missteps that cause their foundational story to crumble. Every flashing ticker symbol on the board represents a real-time vote on a company's future story. The market operates as a machine, constantly pricing in a reality that does not yet exist. Once the numerical facade completely dissolves, the underlying volatile human elements driving the entire system finally become visible. The volatility of these red and green tickers reflects the ongoing collision of fear, greed, and competing narratives as they fight to dictate tomorrow's reality.